Hello and welcome. In this video, we will learn to read the cash flow statement of a company. Okay? Now, before I teach you that, I will give you an example and then proceed with the lesson. Alright? Let us say that there is a company which manufactures bikes or motorcycles. Okay? So, a company manufactures bikes or motorcycles. Let us say that in the previous year, the company has earned 100 crore rupees by selling the bikes. Okay? In the previous year, this is the amount generated by the company by selling bikes. Okay? Then, by selling accessories, the company has earned or generated 20 crore rupees. Okay, accessories. What are accessories? Let us say helmets, tires, and other parts. So, by selling those, the company has generated 20 crore rupees. So, 100 plus 20, 120 crore rupees would be the profit of the company in the previous year. This would be reflected in the profit and loss statement, okay, which we learned in the previous video. Now, let us end here and proceed further. Let us say that the company works in two modes, cash and credit, meaning people can buy the bikes or accessories by paying cash, or they can buy using credit, meaning they can take their vehicle or accessories and pay later. Okay, let us take a situation, that's all right. This is just an example to make you to help you understand the concept of cash flow statement. All right. So there are two modes in which the company operates. One is cash and credit. And let us say that in the previous year, the company has sold vehicle worth of 80 crore rupees in this mode. Meaning people have paid money and have taken the vehicle home. Alright? And rest 40 crore worth of vehicles have been taken home by the customers, but the money is yet to be paid. Okay? Of course, they will pay the money. Of course, the money will come to the company, but at a later date. Right now, this money is not with the company. The customers have not paid 40 crore rupees to the company. It will come, but sometimes later. Okay. Now, if you look at the profit and loss statement, it will say that the total profit is 120 crores. But then, how much money has actually come to the company? 80 crore rupees. 40 crore rupees is pending. Correct? Yes. Now, why do we need to know this? Let us take a situation. Let us say that the company has a loan of 90 crore rupees, and let us assume that today it has to pay back the loan, or else it would have to pay the penalty or fine, okay, for missing the deadline. 90 crore rupees should be paid, okay, paid off. Let us say 90 crore rupees should be paid off. Some amount of loan is there, and out of which 90 crore has to be paid now. How much cash does the company have? It has only 80 crore rupees. How much should be paid? 90 crore rupees. Even though company has 120 crore rupees as profit, This is not with the company. Only this is with the company. So, to avoid penalty or fine, what should the company do? It has to take 10 crore rupees loan from somewhere else and pay. So 80 crore rupees is there, 10 crore rupees more is required, which is not there with the company right now. So 10 crore rupees it has to take loan from somewhere else and it has to pay off the loan. Correct? So this is one situation. Now, using cash flow statement, this is the idea we get. We come to know how much money is actually coming to the company and how much money is going from the company. Okay? By looking at profit and loss statement, we can just come to know whether company is in profit or loss. But then when we look at cash flow statement, we'll come to know how much money is coming to the company and how much money is going from the company. So that gives you the whole picture of the company. Okay? Now, this was just an example. Alright, this was just an example to make you understand the concept of cash flow statement. Now, let us look at the actual cash flow statement of a company and understand various headings. Okay? Before that, let me show you where to get the cash flow statement of a company. Okay? Okay, so I'm in moneycontrol.com and here I will search Escorts Kubota. I'll click on this, and when the page loads up, I'll scroll down and click on financials, and here we have cash flow statement. Okay, we have cash flow statement. So of previous 5 years, we have various headings here which we will learn next. Okay. All right. Now let us learn each heading in detail. Okay. Starting with operating activities. Operating activities is 223 crore rupees. This is the amount generated from core business activities of the company. Okay. For example, this is the cash flow statement of Escorts Kubota. And what do? They manufacture and sell tractors. The amount involved in manufacturing the tractors and selling them, along with the money that has come from sales, is this. Okay. Now let us try to understand in detail. What are the costs incurred in manufacturing the tractor? This company makes tractor, right? Tractors. So what are the costs involved in manufacturing the tractors? First is they have to buy raw materials, and to buy raw materials they have to pay money or give money. Then there will be workers in the company whose salaries or wages should be paid. Then electricity bill, water bill, cleaning bill, garbage disposal bill and other bills have to be paid. Marketing is required, for which money has to be paid. Transportation of tractors is required, for which money has to be paid. And tax to the government should be paid. So all these should be paid by the company. And after they do all these, whatever money they get will be from selling the tractors. So basically, this goes from the company, or these are all the cash that is going out of the company, and money from the sales comes to the company. So this would be plus and this would be minus. So this minus this is this. How much money do they get from sales minus how much did they spend is this. Okay. Now this has to be positive. Operating activities should always be positive. Now what if this is negative? What does it mean? It means that the company is in loss. The company is not making money from its core business operations. Meaning this is more than this. Company is spending more but earning less. That is what it means if this is negative. So this should not be negative. This should always be positive. And higher the value, the better it is. Okay? I hope you have understood this. Next is investing activities. Investing activities. See, why are you learning this course or why are you watching these videos of mine? So that you can invest your money and grow it. Correct? To grow your money, you have to invest it. Similarly, if the company has to grow, it has to invest. And how much money have they invested in the previous year is this. Well, not this amount actually. There is a calculation which I'll explain. Okay. But here we have minus 61, meaning 61 crore rupees has gone from the company towards investing. That's all. Okay. Now let us try to understand the various subsections. What does it include? See, the company can purchase land. Alright. The company can purchase buildings. And the company may discard old machines with older technology and buy new machines with newer technology. These all would be considered as investing. If the company purchases land, its value will grow. If it builds and invests in production, then the company will grow. Alright. So these would be considered as investing. Next, if the this company invests in shares or bonds or FD of other companies, let us say, then it would be considered as investment. Okay. If Kubota buys shares of Infosys, then it would be an investment. If it buys bonds, investment. If it goes for FD, it would be investment. So all these would be considered as investment because the money will grow over time. Alright. Now for all these, the money will go from the company. So all these would be negative. Money will go from the company. Next is money from liquidation. Let us say that the company had bought shares of various companies some years ago. If the company sells those shares in the previous year, if the company sold those shares in the previous year, then it would be positive for the company, meaning money is coming to the company. Okay? Think of yourself itself. Assume you had bought shares 10 years ago. Okay? Now if you sell it, you are getting money, correct? Money is coming to you. Same way, if the company had bought shares of various companies, or if it had bought land somewhere and now it had sold, then money would be coming to the company. So this would be plus. This is minus, this is plus. So this minus this would be this. And here we have minus 61, meaning this is more and this is less. Okay. So in the previous year, this was the amount generated from the core business, and in the previous year, financial year, this was the this is the money that went towards investing. Okay. Next is financing activities. You see, the company requires money or needs money to operate or to function. And there are various ways to generate money. One is by equity or shares, other is by taking loan or by issuing bonds. If the company issues new shares, then money would come to the company and that would count as equity. If the company takes new loan, then money would come to the company and that would count as incoming plus. Next, by issuing bonds, company gets money. Okay. In other words, by doing all these, the company gets money. So plus, money would come to company. If the company pays dividend to its shareholders, or if the company pays interest of a loan, or if the company repays any loan, then that would mean money has gone from the company. So this is negative. Okay. All these activities leads to money going out of the company. Okay. One more is that buyback of shares. If the company buys back shares, then money would go out of the company. Okay. So these are positive and this is negative. So this minus this would be this. Okay. In the previous year, company has spent 71 crore rupees towards financing. Okay, financing. Now, looking at this, we will not come to know towards which activity it has spent. We have to go in detail, but it is not required. But just know that this is negative, meaning company has spent, meaning this is more and this is less. Okay. Now this has to be positive. This has to be positive and it has to be bigger number. Bigger the better. This has to be negative because it is good if the company invests. Okay. And bigger the number, the better. More investment means more returns in future. Now this we cannot decide anything from this. Okay, we cannot decide anything from this. This is not required, leave it. This minus this is net cash flow. Net cash flow is 90 crore rupees, meaning company has got 90 crore rupees in the previous year, meaning this much money has actually come into the company in the previous year. Okay, so this is what you can infer from looking at cash flow statement. This is the actual money that has come to the company. All right. Yes. Now, by looking at the cash flow statement, you cannot decide anything. You have to look at the balance sheet of a company, profit and loss statement of a company, and cash flow statement of a company, and relate each thing with another and analyze a company. Okay. So this is it for this video. In the next video, we will apply whatever we have learned and analyze the company. All right. So that's it for this video. I'll see you in the next video. Till then, take care and thank you for watching.